Good afternoon, ladies and gentlemen, and welcome to the ORPHAN PLC Interim Results Investor Presentation. Throughout this presentation, investors will be in listen-only mode. Questions are encouraged, can be submitted at any time using the Q&A tab situated on the right-hand corner of your screen. Please just simply type in your question and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company review all questions submitted today and publish responses where it's appropriate to do so. These will be available via your Investor Meet Company dashboard, and again, we'll notify you by email when they're ready for your review. I'd also like to remind you that this presentation is being recorded. Before we begin, we would like to submit the following poll, and if you'd be so kind as to give your attention, that would be most grateful. And I'd now like to hand over to Cathal Friel, Chairman from ORPHAN. Good afternoon, sir.
Mark, good evening. Thank you very much, and thank you everybody for turning up on the Monday evening to listen to our latest update. Without further ado, first of all, I hopefully will make it slightly better. The last time I was on the platform, the 9th of August, Monday, I've done a lot of presentations. It goes down in history. My worst presentation of my life. Everything went wrong. Audio went wrong, visual, there was no visual. And then the questions, I ended up having a bunch of questions were all the repeating ones. I normally have the repeats reduced. So at least tonight, we're starting a better note. We've got audio, we've got visual, and I've got a proper set of pre-submitted questions. And please submit lots of questions tonight, and I'll do my best to answer most of them. Okay, without further ado, I'm going to take you through our update presentations, where we are, how we got here, and where the rest of the year is, and more importantly, how next year is looking. So first of all, let's move. So the usual disclaimer and where we've got ourselves. So this is really interesting. We've put together, and this is what I'd say, you've come on the journey with us, most people. We took Venn Life Science just over 2.5 years ago and hVIVO just over a year and a half ago, put them together. Neither were profitable in our life. Neither, being honest, were particularly good at anything, but they insulted all the staff, I shouldn't say that. They were kind of struggling. However, putting them together, cleaning them up, and on the back of the pandemic, we now have created the world leader in the testing of vaccines and antivirals, using human challenge studies, addressing, and this is really important, the growing infectious and respiratory disease market. That market, traditionally, up until this year, is about a 30-40 billion a year market. 90% of that market is your annual influenza jab. By 2025, that market, all the pundits are agreeing on one thing, it'll be about 250. That's 3.5 years out from now. Imagine it's going to be a 5-fold increase. And we're there to test any and all of those infectious disease and respiratory disease. You may ask, well, where did COVID go? Well, hey, it's a bit like out in the market outside of here in East London in Whitechapel. COVID hasn't gone away, it's still here. But the bigger market is that growing infectious, very predictable. Big pharma. I'm going to talk about both tonight to give you a bit of a color. What is the plans the rest of the year? What is the plan for not just next year, next couple of years? But I just think it's never been more exciting. We now have a real business in a real sector where we're the world leader. At a glance, and again, I've done a lot of presentations over the last 2.5 years, but what have we? First of all, and again, we've got a lot of flack. Well, Kyle, exactly how much revenue you did this year, exactly how much revenue you did the full year, exactly how much profits. Well, here we go. We're doing that today. First of all, H1, that was the first half of this year over last year, was 242% up. And Leo's going to read through those exact numbers. At a glance, we've now 9 challenge study models, and one of them, the latest one being malaria. And we have another one in the pipeline, and we're looking at TB, tuberculosis as well, which is another growing one. Strong pipeline of repeat, big pharma clients. We now have the Pfizers, the GSKs, the Roches, the Sanofis, the Janssen's, you name it, the Mercks. It's a hell of a business, and these people now are repeating. Traditionally, hVIVO get one of those every 4 or 5 years. I'll show you in a minute. All of those either signed the contract or in contract negotiations. That's a pretty nice customer base. Really important. I've been saying for over a year, we're not just COVID. We're not just COVID. The reason I've been saying that, I've always believed the vaccines will eventually work and COVID will go away. COVID has been, the pandemic's been good for the company, but it has created a monster market, this 250 infectious disease market. But making clear, the first half of the year, 75% of our revenues, and I'll come to the Q&A where you can see them in, were non-COVID. That's traditional influenza studies like we've done today. That's the 3rd study we signed this year. RSV, we signed 4 of those. RV, ASPA, all that good stuff. So that's the non-COVID revenues. EBITDA, people were a bit spooked at the end of June, and when I spoke to in August, well, Carl, did you really make money in the first half of this year? And I was going, well, we can't say that yet, but we did. Well, here we go. 2.1 million EBITDA in the first half of the year. Gross margin 28%. It should be better. We'll come to that in a minute. 250 million infectious disease market. We have 43 quarantine beds we own and control. That's 24 in QMB and our 19 across the road in the hotel. And guess what? We've also the 19 which we don't pay any rent for up in the Royal Free. But more importantly, we've proven over this last year how to take a hotel and convert it to quarantine unit. The hotel is 50 meters across the road. That's the Whitechapel Hotel. It's now the Whitechapel Clinic. And we can get away with converting that for less than $1.5 million. The client paid for it, didn't cost us any money because we designated it as a site extension. Within 250, 300 meters of our Whitechapel place, there's 4 other hotels we can pick and choose as site extension. So in case anybody are worried, where are we going to fill out more? We can repeat that exercise. It takes about 3 months. There's a number of hotels that fit the bill, so we can play one off against that. So we will extend our quarantine facilities on the back of filling these out and on the back of demand. We're not going to fit them out and wait for them to come. We'll get the studies and then we'll get additional beds. So expansion is no longer a problem. The first half of the year, we had 6 active challenge studies, and in the total year, we'll do 10 at a start or finish. hVIVO only ever did 1 or 2. Its best year ever did 3. How come we're doing 10? Because we're doing them faster, quicker, and we're charging a lot more for them. And that's the client doesn't really care about the price too much. They want the data. Pfizer signed the study on the 28th of October last year. The previous study that signed with hVIVO was 5 years ago. It took them 18 months to get the data onto the old management. We delivered the data on 6 months. That's what they wanted. And the CEO on Pfizer, during his Q2 updates, mentioned one of 4 things was our study. The first thing was the COVID, and the second was sensational results in an RSV challenge study. Now, didn't name check us, but we're the only people doing them in London, and he says transformed their RSV vaccine potential. We have our Paris office. We've got 25 people in Paris. Everyone makes money and everyone is billable. We have no administration staff there. We'll keep it at 25. 50% of the revenue comes from supporting the data management biostats of the challenge studies, and 50% is the big French Ipsen, Servier, and all those good people. Breda, they support London as well. It's CMC, PK, and preclinical. That's consulting. Again, not a huge business. Between Breda and Paris is about 7 million euros in total. But guess what? Both of them now make a healthy profit margin. They'll grow incrementally about 15-20% per annum because it's a body shop. Every new contract, they bring in more consultants. Whereas London, new contracts, we've got to fill the basic beds, and every additional one is jam on it. So basically, you can scale London and make vastly bigger margins. But having Paris and Breda are very, very important. The market opportunity. I know you heard me talk a lot last year about COVID and say we're not purely COVID, but guess what? The market opportunity is sensational. And that's where I think as the market was falling apart today in London, worrying about Chinese, worrying everything else, quite a few brokers say, hey, Carl, you didn't really blow the lights out in your results and your share price is up a bit as the market was falling apart. I know we've ended slightly down, but I think the people are looking at, wow, this infectious disease market is booming post-pandemic. It's going to grow to 250 billion annually every year by 2025. Every major pharma company, Pfizer, GSK, J&J, Merck, Sanofi, etc., have now rolled out multiple new non-COVID vaccine programs in the last 12 months. Guess what? We either have signed a contract with every one of those or in contract negotiation. Isn't that pretty cool names to have? And multiple, they're coming back. What's going on? Big pharma and governments are restocking and replenishing. 30 years of underinvestment in infectious disease products will be one of the biggest gold rushes in the history of pharmaceuticals. Oncology, gene therapy, none of them ever passed 100, 150 billion a year in market size. And this is 250 and rising. Even our friend Biden in the White House is making a big deal of 65 billion. What they all realized is at least 17 trillion worth of damage done to the world economy. So the governments, big pharma know they need to spend hundreds of billions to ensure we never have a pandemic again. And the beauty about it is Every one of those new infectious disease products have to be tested, and testing them in a challenge study, 6 months can tell them have they a winner or a loser. So that's where we sit. Customer pipeline, making it really clear. In the first half of the year, people say, well, where's your COVID revenues? Where we want to talk about. We had 5.4 in the first half, and it was 16.5 in real revenue. That's other challenge studies that will repeat. We have a significant pipeline for the world-leading pharma companies. The names are there. Pfizer, J&J, Sanofi, you name it, we have them. And it's a pretty cool place to be. Operational highlights. I don't want to dwell too much in this because what we really want to do is Leo to give the financials, and then I'm going to bring people through a lot of questions because I think a lot of the where we're going, what we do will be handled in the Q&A. But first of all, we've increased challenge study capability. The Whitechapel Clinic, we converted 19 bedrooms. There's another 9 there we can convert. We didn't convert all 29 beds. Royal Free 19, QMB, the original one we have, volunteer screening, and we continue to diversify the lab and service office. Now, you might ask, rightly so, well, Carl, what about COVID? Well, here we are. The COVID work is dependent on finishing the characterization study in the Royal Free. If you read carefully, there's so much we can say do because it's government controlled Imperial University. But if you read our RNS, we said the work in the Royal Free is not completed. That means the characterization study completed. That means we can now finally look at potentially signing large contracts. The contract we signed this morning for an influenza, the one we signed with GSK for 8.1 for asthma 3 weeks ago, we signed them, and then we seek approval from both the MHRA, that's our regulator here in the UK, and the ethics panels. When it comes to COVID work, the reason we're saying we're not going to do much the rest of this year, it's been pushed to next year. A lot of those big studies, we now have to line them up. We cannot sign contracts because that would piss the regulator off seriously. Hang on a minute, you signed it. Each one of our COVID studies, we go back to the UK ethics panel and the UK HMRA, and we seek permission. When they give that, we'll make an announcement. So all I'm saying, the COVID studies, we're trying to be very realistic, say, look, we know we'll do 50 million next year in real revenues in non-COVID. We'd hope to do substantially more. On top of that, we've baked in already 5 or 6 million in existing ongoing government COVID work. And my belief is any additional COVID revenues will be on top of that. So we want people buying in. What can we control? It would be remiss of me to say that COVID's over. There is the new variants. We've grown it up. And there will be always a need to test them quickly. And I think what's going on at the moment, the actual current vaccines, we all know, the Pfizer, the Astra, the rest are working pretty well. But there's a whole wave of other products coming through, antivirals, monoclonals, and other vaccines. And how are you going to compare? And this is the big issue. I think our friends in Valneva went bananas and people like that went bananas. It's very hard now to compare a new vaccine to one of the existing ones when everybody in the world is vaccinated. So the only way, and this is genuinely the only way, will be in a challenge study. We're biding our time. We're the only people who have a working COVID challenge study in the entire world. And guess what? I think we're going to have an exciting year. But I want everybody to focus on what we can deliver. And that's the existing challenge studies, the respiratory diseases, what we can do. And Leo will talk us through now where we've actual visibility on at least 50 million next year and more on top of that. Why was our profits not higher? We wanted to come out early. We didn't want everybody waiting to January and say, oh, we didn't quite make the numbers. We wanted to be very clear, set expectations and beat them. That's what we're trying to do today. Yes, our brokers pared our back a little bit, but it's only a small bit on the overall scheme of things. And we think we can easily exceed the expectations that have been set from today. Leo, over to you, please.
Thank you, Carl, and it's great to be here and to speak to everyone tonight. I want to just give you a headline overview of our financial performance in H1 versus last year. And big picture, this is really the culmination of the work that we've been doing for 18 months. It's the promise that we have made to investors in terms of our work plan. And the results are very satisfying. Firstly, revenue is up 242% year on year at 22 million in H1. Our gross margins have grown from 6% to 28%, in the period, and those combined to really turn around the loss-making position of last year, where we lost 4 million euro in terms of EBITDA. Now we're making profitable 2.1 million euro. And importantly, we're continuing the trend that we started in Q4 last year. And a couple of elements just to draw your attention to. Clearly, part of this turnaround of performance is driving overall yield, leveraging the fixed cost base that we have on the business, which has held us back. So in the 6 months, our revenue per head has more than per employee has more than doubled. We have more than doubled our utilization in our facilities, and that's factoring in that we've actually increased our facilities through the Royal Free Hospital and through the Whitechapel Clinic. We are very satisfied with the growth in margin, but we know we still have work to do. 28% is good, but we want to be targeting over 30%, ideally on our way to 40% in terms of margins. And I'll touch on what we're doing on that in a moment. Cash is a critical part of our financial measures, and at the half year we had £15 million, approximately £15 million in cash. The trajectory since year end reflects normal working capital movements because we had significant client prepayments on our balance sheet at the end of December. It's also reflecting some timing gaps in terms of receiving R&D tax credits, and it's also reflecting investments that we've made to enable spin-outs, one of which, Poolbeg Pharma, we completed in June this year, as well as normal CapEx that we do to replenish ourselves in the labs and across our business. Our outlook for cash is that we will be in line at the end of the year with our H1 balances, so no concerns that we're bleeding cash as we drive the business forward. We touched on the share capital reorganization, which is really the technical changes to our balance sheet to enable us to do a dividend in specie, which we did to enable Poolbeg Pharma in June this year. I want to touch briefly on the key value-added initiatives. And the first key initiative really is how we drive revenue. And we touched on it when we at the full year review. Driving closed contracts is one of the key leading indicators of our performance and really sets the scene for future periods. Already, with the deals that we've just signed in September, we've exceeded the overall value of deals that we signed in 2020, and we still have 3 to 4 months to go, with some really big agreements under negotiation with major pharma players. So that augurs very well and sets the scene for our revenue growth in 2022. We're continuing to make smart investments in our platform. We're investing in malaria, pneumococcus, tuberculosis, all about broadening the challenge model, not just to rely on the historic models that we've had. We're also investing in getting improved accreditation in our labs so we can broaden our services to big pharma and to other CROs who don't have this capability. Finally, linked to my point about margins, this year was around turning around the financial performance and getting back to profitability. Going forward, we want to really optimize our profitability so that we're performing in line with our peers or the top performers in the market. So we're focusing on cross-selling. How do we connect with our customers in the other sides of our business, in Paris, in London, and in Breda, so that the cost of selling actually comes down? How do we focus on driving increased productivity in our business by implementing smart technologies, by simplifying the way we work? Right now, our goal is we need to get well above 30% in gross margins, and that gets us on the right track to be in line with our peer group. Finally, we need to continue to be very, very disciplined in terms of our overhead, managing our cost base, so that if we can grow our revenue by another 30-40% and more, but keep our overheads flat, then we're getting significant operating leverage to drive improved margins to the bottom line. And that's the program of work that we want to continue now that we're basically profitable, but we want to drive ahead on that. Let's talk a little bit about the outlook. Cathal has alluded to it, and I think the big picture here, there's a couple of big strategic points that we want to call out here. And it's really looking at the trend line rather than focusing on very short-term headlines. It's very clear we could have done better than the numbers that we could have done. We could do better in 2021 had we got a COVID deal across the line. But the bigger picture is, if you look at movements in the infectious disease market, if you look at the adoption of challenge studies as part of the armory of CROs and pharma companies, there's a huge opportunity to broaden the our traditional business. So we're guiding right now 40 million for the end of 2021, and we're guiding full year profitability for 2021. But as we look forward, even if we just focus on our non-COVID business, the deals that we have already signed, plus the pipeline of deals that are in advanced negotiation, if you layer on top the recurring businesses that we have in Paris and in Breda, we are well on track to deliver in excess of 50 million pounds in revenue for 2022. And that's not factoring 5 million pounds of revenue that we have already contracted for COVID. So the message we want to give is the trend line is very, very positive in terms of our traditional business. We are not relying on COVID to be our engine of growth as we go forward into 2022. But you must remember, COVID remains a really good opportunity to give us upside on the numbers that we're talking about today. There's already 5 million in, but that could easily be 15 to 20, depending on the nature of the trials and the timing of those trials. And our hesitation around calling a number is because there is uncertainty about when these trials would start. As Cathal alluded to, regulatory clearance is an important enabler to get these trials started. So we want to give you real comfort that the base traditional business is a very, very strong engine of growth. We're not relying on COVID, but COVID could be a really strong source of upside as we go into next year. So in summary, we're satisfied with the results that we're sharing with you and you've seen today. They're the culmination of the work, that the journey we set out on 18 months ago, but we're not satisfied to rest on our laurels. We're resetting our goals in terms of driving long-term performance of the business, and we see a really strong opportunity linked to growth in the market. Cathal, back to you.
Leo, thanks for that. So look, in summary, folks, we could have we all know we have made no COVID challenge study announcements. Reading between the lines there, it's ready. So going in next year, we will do COVID work, but I can't emphasize if it had come in this year, we would have hit the magic number of 50 and a much bigger profit figure. But we are, for everybody on the call tonight, we're emphasizing today, guess what? We're finally profitable for the first half of the year, the full year, and we're pointing out of the cash. That cash will not drop. I know then the June and August, my disaster presentation, the 9th of August, people were worried, hang on a minute, you guys are burning cash. So the big message today is we're now in a business that's generating cash, and we're now in a business we're going to continue handing these dividend species back. So let me take you to those. Poolbeg Pharma, we're a small team. Like I get into trouble because I'm a bit too hands-on and we don't like spending too much money. But we're worried if we build up this big structure of CEOs and people, how do you get rid of them? They run the company for themselves. So at the moment, we've got a relatively lean and mean company. Poolbeg, we did it. Most people thought we didn't. We got a pre-money at 25 million. We raised, that was 90% owned by open orphan shareholders. It's a dividend species. Took a bit of work and time with advisors to find a structure that we could give you and myself and everybody else shares, and we didn't pay income tax. And we had to do it at HMRC strategy demerger to get their approval. So that means the shares you got, there's no income tax. You pay tax on the capital gains. Yes, they're locked up for 9 months, but guess what? We've done very little news flow over the last 2 months. The share price hasn't gone down. It was up 30% at one stage. Watch the news flow in the next 3 or 4 or 5 months. And I think by the time the 9 months come round, it'll be in a very, very different place. The beauty about Poolbag, it's got clear trajectory to go straight on to NASDAQ very, very quickly. And I imagine well before that 9 months, I know people are worried, we'll have situation under control, that the freeing up is not going to damage the share price. The next one, we control 100% of Z's in motion. We've done all the work. We did spend some of our cash early this year getting the malarial model up and running, and not alone getting Poolbag, getting it structured, but getting disease in motion. So there is no more money being spent on disease in motion. It is ready. It's a matter of now going through the process. We probably won't get it done this side of Christmas, but we'll get it done very early in the new year. So I had hope, but around the turn of the year, we'll be giving you who knows the valuation. I originally said we didn't know what Poolbag. I think disease in motion should entail a bigger pre-money. It's more sexy and exciting. It's in an even, people are asking, it's about infectious disease and wearables, big tech. But guess what? We have a model coming together. It's going to be tools, everything to do with running clinical trials, because the big tech, the wearables, the watches, the iPhones are trying to help. But we've got a whole series of tools to give them in indicating post trials, and also it's going to be a really cool CRO tools company, and I think that could grow very fast and very extensively as a totally standalone company. Bear in mind, each of them, Poolbag is only one full-time employee. That's Jeremy, the CEO. Everybody else, we've got about 8 or 9 staff, 50-50. So that means we reduce the overall headcount cost in Open Orphan, and Poolbag gets new resources. We share the rent, so there's a lot of, so basically the benefit of having these spin-offs, they're actually very good for the parent company as well. Immutex, I'm frustrated, but hopefully there's a dialogue underway. I think our friends in the SEEK group are now much more attuned to where we should go with this. And trust me, I keep saying trust me, I shouldn't say that. Work in progress. We will deliver a result in Immutex. Likewise, Prep Pharma. All I can say, we want them all done by Christmas, but by hell, we'll have them all done by early next year. And we're going to go into early next year as a pure CRO, world leader in testing vaccines, antivirals. And guess that, where do we go next? As we're already looking at Poolbag to NASDAQ. My previous company, Amrit Pharma, has gone on NASDAQ and it's worked out pretty well. It touched briefly Thursday $1 billion enterprise value. That was 750 market cap and 250 in bonds. That's my ambition for all of these companies. Open Orphan. How do we get Open Orphan to NASDAQ? Very simply. We're probably a little bit in the small side. We may, at some stage over the coming months, get into bed with a much larger company who can't go to NASDAQ, but who would love if we put the two of them together. In my view, if we did successfully get into bed with somebody, bigger, merger, some form of that, then we can go to NASDAQ faster and swiftly. And on NASDAQ, not alone do we believe we're worth 2x our current share price. It's quite easy to have 3x. As I keep saying, we're a services company, but we're designed for NASDAQ. That's where we're going. So that's the plan over the next 12 months. And a key part of that will be cleaning up, handing back the non-core to shareholders. So hopefully that gives us summarized where we are with those. They're work in progress. Yes, we could move faster, but hey, the infectious disease market is not going away. Sometimes we rush them out. We might have got X for Immutex 6 to 9 months ago. We might get 2X between now and Christmas for it. But look, it's work in progress. Final slide, because I really want to get in. There's a lot of questions. As I say, we've a lot of pre-submitted questions. So in summary, 242% increase in H1 over H1 last year. We're EBITDA profitable. We're bloody profitable first half. We're going to be profitable the full year. That's clear. 75% non-COVID. Look at 75% non-COVID for most of the year. We're guiding 40 million, not dollars, pounds sterling for the full 2021. We are hoping and planning on exceeding it. We want to reset those expectations because there was one very large COVID study. Pfizer CEO had signed off on it, and our friends in the Royal Free just couldn't get the bloody characterization model finished in time. I emphasize there's tons of COVID products coming down the road. It's going to be very hard to test them in community. We saw even that last week, Valneva complaining it's really hard to get a good result when half the world's already vaccinated. So that brings it back. The only way to test, not the only, one of the main ways to test new COVID products is in a challenge study because we control the environment. Next year, 50 million, we're targeting that and we're intend exceeding it substantially. That's non-COVID revenues, that's challenge studies, that's we've signed influenza today, 2 already this year, it's our 3rd one. Asthma a few weeks ago, previous one was years ago. With 4 more influenza studies. Influenza is the new COVID in this business, basically. New challenge study models. We've had malaria, and we're bolting them all now on a very low cost base. So the next challenge model we're looking at is TB in prisons all around the world. That's becoming a huge issue. We've increased recruitment capacity, and then we've done the first spin-off. So without further ado, I think it's time I started to answer questions. I know people have a lot of questions, so we've had over 60 pre-submitted questions, or I think is Mark went in there at the moment.
I was just going to give you a small pause, Cahill, because as you say, a number of questions have come in. It'll give you a chance just to have a look through some of the live questions. But ladies and gentlemen, please do continue to submit your questions using the Q&A tab situated on the right-hand corner of your screen. But just while Cahill and Leo take a few moments to review investor questions submitted already, I'd like to remind you that the recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your Investor Meet company dashboard, and we will send you an email when they're ready for your review. I'd also like to remind you that your feedback is as important as ever to the company, and immediately after this presentation has ended, we will redirect you for the opportunity for you to provide your feedback in order that the company can better understand your views and expectations. Cahill, I'll hand the floor back to you if I may, sir. Obviously, you've got those pre-submitted questions, and then if I could ask you to open the Q&A tab and read out the live questions as you can, sir, and then I'll pick up from you at the end.
Well,
thank you.
I've been reading the Q&A as Leo was talking, so I could see them coming in. First of all, with 60 pre-submitted, quite a lot of them naturally, they're duplication. So we've reduced them down to 22. There is 4 around results and financials, 7 around the spin-offs, 2 around the services non-COVID, 5 around the services COVID, 3 around general outlook, and actually only 1 about the share price. And we go through them pretty quickly. Our colleagues in on the platform are both Walbrook and Investor Meet. What they're doing, there's lots of questions down the right here, but quite a few of these questions are almost duplication of what we have. So I'll get through these 22. Leo's going to answer a few of the financial ones, and then our colleagues will delete the duplication, and the remainder of questions remains unanswered here that's coming in tonight. I'm going to do our best to answer every one of them, and we'll try and wrap up around 7. I want people thinking, bloody hell, when will these guys shut up? So we'll try and hard stop around 7-ish. Okay, kicking off. First question about financials. Can you give an indication of the current full year forecast, both top line and bottom line? Where can we expect to finish? I think that's over to you, Leo, but I think really rather than repeating, you've kind of done that full year 40, is there? Anything you need to add to that, Leo?
Yeah, that's about right. And I think, well, we're not guiding explicitly on the margin, on EBITDA profitability. It'll be broadly similar margins as we reported for H1.
I think the most important one for everybody on that one, full year profitability and the cash pile not getting smaller, increasing slightly. It would have increased substantially if we had pushed through the full 50 million we're hoping on, but we're trying to be modest. We might still pull a few surprises between now and Christmas on the revenue line. Question 2. We've been told that dividend will be paid by Christmas. Is this still the case? Yeah, look, it's work in progress. We'd be more interested in getting the dividend species out first. And then as that cash builds up, then of course a dividend. And bear in mind, I've been buying shares. I paid 300,000 earlier this summer at 27.5p a share. I would be the first one who'd welcome a bit of cash back because, as you know, I cannot have no intention of selling shares anytime soon. So yes, a cash dividend would be welcome. But I think the focus is get the dividend species, which are vastly bigger. Bear in mind, Poolbeg was 25 million in real shares handed back. And if that performs anywhere close, we think it's a 3x, that becomes 75 million. Question 3, the last audit report treats currency as a risk, as a key audit matter because of your slim profit margins. Why are margins slim? I think, Leo, that's for you. You've got a couple.
Yeah, this is a typical question that our auditors will ask as part of their going concern review, and you'd expect that. I think it's really looking back at the shape of our business a year or so ago when we had slim margins and there was very little room to manage major swings in currency should they happen. So there's 2 points on that. Firstly, H1 show that we've actually significantly improved our margins. Our gross margins are now up at 28%. We're now EBITDA profitable. That nominally gives you headroom to manage currency risk if it happens. But the other side of it, in terms of our operations, we're generally hedged quite naturally in terms of our sterling and largely euro spending. We typically fund our euro activity in the Netherlands and in France, and all of our key sterling spend is in London, where we get our sterling revenues. So generally, we're quite well hedged in terms of currencies. We've no dollar or other, no material dollar exposure or exposure to any other currencies. Carl?
So, question 4, the last one on results and financial. Please, will you release the full year results in a more timely manner, i.e. February or March? Yeah, the one issue with the results is they're subject to an audit. We have 3 companies, one in France, one in Holland, and one here in London. So it does take, results are subject to an audit. So generally it takes 3 months to get audit sign off. So end of March, early April, unfortunately, is the time the earliest a company goes, because bear in mind, PLC is just the audit takes a little longer, but 3 months post year end, that brings us into February. Next question, spin-offs. Very quickly, question 1, why is Jeremy Skillington not bought any Poolbeg shares? It's a very simple answer. Look, Jeremy came in very late, literally the weeks and days before the IPO. He basically didn't really get an opportunity to invest. But don't worry, Jeremy's going to have lots of opportunity in the months ahead when we get an open period, and he intends investing, so that'll be taken care of then. As regards the disease and motion spin-out, when do you envisage this to be done? Weeks or months away? I'm kind of guiding, I've always said around the turn of the year. Is that before Christmas, after Christmas? Genuinely speaking, probably more like after Christmas this stage, given where the markets are, but it won't be long after Christmas. 3, are the previously tech and wearable companies still showing interest in the open orphan data? I asked the question because in the previous presentation, it's been mentioned that it's offered to pharma companies. Absolutely. Look, we've got the world's largest infectious disease progression data. Everybody's interested. Disease in motion is going to be really cool. It's going to be providing data to the wearables, but more importantly, the wearables is one market, but all clinical trials need this data. So we're putting algorithms together that we can sell directly to any pharma company in the world doing any trial. Here is algorithms, here is data that will speed up and give you a better outcome to your trial. And only a company coming with its roots in the clinical trial can do that. So I think the whole disease and motion spin-out is going to be super exciting. Question 4, also, do you have a potential CEO in mind here? Yeah, look, work in progress. We probably should have got the CEO, Jeremy, much earlier on Poolbeg. We had one lined up, and somebody contributed and somebody made a better offer. So again, we're in the business of making offers. We don't want to give away. Some CEOs want a massive slice of the spin-off. I believe the spin-offs are owned by you and me. I don't believe in giving away a ton. So look, work in progress. We have a spin-off, a CEO or 2 in mind. 5, Imutex spin-out is still delayed. Please update it. I think I covered Imutex. It's work in progress. We are now in good conversations with our conservee. I think they've heard my views publicly, and that's work in progress. So please bear with us. It's a good time to be doing something with that product. 5 or 6, we've been told multiple times you'll conduct spin-outs by Christmas. Is this still the case? Look, it's work in progress. I keep emphasizing we're keeping our team small and focused. We're not building a massive cost structure. Some of these things do take a little longer. That contract we signed this morning, look, again, we're a small team. There's not many companies banging out 5.7 million contracts nearly every month as we go forward. There was a lull over the summer because not a lot happens in pharmaceuticals for June, July, and August. But hey, we did 8.1 million last month. We've done 5.7 this month. There's no reason why we won't do one of those each month between now and Christmas. 7, do you see a cost that will impact profits in spinning off non-courses? Absolutely none. We built up some costs. We said earlier part of the year, the reason we did consume a little cash before the end of June was getting the spin-offs, not 1, not 2, 3, but 4 ready, getting the malarial study ready. So there is, going forward to the rest of the year, there's no more cost consumption. So that's where Leo's guiding. we will end the year with the same cash within June and hopefully substantially more, but no less. That's the spin-offs. Services business non-COVID, we've got two. Cathal, with the new malarial chim being accessible for November, is the company developing any more chims? If so, and when will be available to clients going forward? I think I let the cat out of the bag earlier. TB is the next obvious one. It's a very simple. There's a ton of products coming down because the world is afraid. Well, could TB come back? And so any of these things, terrible thing to say, TB is rife in prisons, especially in Russia and China. They're creating a demand government will pay for it. So yeah, the next one will be TB. And malaria, and we're hoping to sign a few that watch this space between now and Christmas on malaria. 2, shareholders were led to believe that a major contract will be signed by Chinese state. What happened to this? Well, I think most people know what happened to China. Cameron and China were best buddies. Xi was best buddies with Americans. China's got a little bit more difficult. The politics has gone away. But guess what? They, more than anybody, wants China studies. The Chinese want they have a huge problem with influenza, a huge problem with pneumococcal. So all of them say it's taking a little longer. Unfortunately, it's a bit like our French friend, politics got in the way with the old sub in Australia, and our friends ourselves here. I like my British passport winding up some of our French friends in the colleagues and said, oh, you weren't good enough at building subs. But yeah, look, unfortunately, China things are taking a little bit longer due to international politics. And this is services business COVID. Cathal, has the company been in talks with any clients regards to COVID-19 contracts? If so, when will it commence and roughly and when? Absolutely. When and roughly? Yes, very importantly. This is almost a planned question by myself. When will these COVID studies commence and which site? Well, the good news, first of all, is we now, COVID is now become almost epidemic. We can run them in QMB. We can run them in a hotel. We're not stuck with doing the Royal Free. We can continue to access the Royal Free. The government pays for it, but we're in extensive conversations. There is actually more inquiries than ever because every mid-size pharma company with a COVID product saying, how do we test our product? Because half the world's been vaccinated. It's an interesting problem. How do you test a product for COVID if you can't find people getting sick particularly well? Challenge studies has never been more important. The reason we're emphasizing on our split of revenue day, it is taking time. COVID is still scary for regulators. COVID is still, we're saying 50 million next year without COVID, and COVID's on top of it. Is that 10, 20, 30? We don't know. It'd be wrong to say how much, other than I genuinely believe there'll still be a lot of COVID work next year. It's just going to take a little bit slower, a little bit longer, but it's a bit like COVID itself. It hasn't gone away, and it seems to mutate and change. Second question, when will the characterization study be completed? Will there be an interest in COVID studies, Ben? I think I've answered that. The study is completed. We've had a lot of academics. One could say, I could use the F word, around and messing around. Customers don't like seeing academics hanging around these studies. They never know when they have enough data. It is finished. And I think I covered, there is probably more interest in COVID studies now than there were 6 months ago and 12 months ago. Yes, the Pfizers of the world have their products and they're rolling them out and making gazillions. But guess what? There's over 2,000 COVID-related products in the clinic in some forms of trials. So many of them are targets for a challenge study. 3, are big pharma going straight to phase 3 with comparison studies and therefore do not need us? Absolutely. Some of the big pharma will do comparison studies, but again, they run into problems like Valneva last week. How do you find COVID naive? How do you test it? And that's the issue. They're all saying, oh, it's not fair. Pfizer got to test their vaccine when there was no COVID in the community. There's so much COVID, or when there was no vaccinated people in the community. There's now, it's very hard to find people who are not vaccinated. So that's where we're in that regard. Next question. The government COVID challenge studies seem to have stalled, awaiting further sign-off decisions. When is this now expected to start? What are we waiting for? Yeah, actually, look, again, I think when we're dealing with governments, you know what it's like. It's difficult to get sign-off. It's difficult to get decisions. That's why we're emphasizing non-COVID. But it's not going away. Britain is the world leader in vaccines and the rollout and the approval of them. And Britain is the only country in the world that has decided to do a COVID challenge study. So my belief is, bear with us. They'll come through. It just might take a little longer. with the 40 million UK contracts is to be delivered, will the 40 million UK contract be delivered in 21, and will the full contract payment be seen in the 21 books? Look, I think Leo made it very clear. There's 8 million of COVID revenue in the first half of this year. There was some last year. There'll be 12 million for the full of this year. Yes, there's a substantial amount more COVID revenue outstanding when we get round to working it with the government. And more importantly, we've also 3 slots, 7.5 million. There, use them or use them slot, one this year, one next year, one the following year. The government can't pay for slots and then not use them. It's literally use them or lose them slots. So I think, look, that has been an interesting contract. There is still quite a bit of work outstanding and quite a bit more work, but bear in mind, it's all on a cost plus basis. We got that. General company outlook. So now we're into I can start switching over to the online ones. I'm down to my last 4 questions from the pre-submits. So this is about the general company outlook. Carl, seeing the company is pretty well much booked to the end of 22. Are you still looking to expand the footprint? As surely the new CHIM on board is limited revenue-wise without this. Look, the beauty about it, I said, we went from a year ago, 1 quarantine clinic QMB. We expanded up to Royal Free, and we managed that entirely from here in Whitechapel. And then we converted the Whitechapel Hotel. We can easily now convert another hotel down the road. There is 4 within 200 meters, all of which will be defined as a site extension. So I think we're not going to have a problem with capacity at this stage going forward. We don't need to go abroad. And the more we cluster activities around each other in Whitechapel and East London, the more efficiencies and the bigger margins we make. 2, do you intend to dual list Open Orphan in NASDAQ as well? Absolutely. My plan, look, at the moment is, you all know, I said we clean these companies up, fix them and sell them at 50 million. And then we said we'll sell them for 100 million. Well, guess what? I think we would get multiple X uplift if we get our way onto NASDAQ. We would have to stay dual because we have a lot of institutions as well as a lot of family offices. So we'll always stay dual, a bit like Amrit Pharma. That's the other company I co-founded. Amrit is now successfully on NASDAQ. Amrit will do 250 million revenues this year. They had close to 200 million last year. That's a nice number. That was a little oil and gas shell that people laughed when I said I was going to convert it into. I still have a good stake sitting in it. And yeah, NASDAQ's the place to go. I've said earlier, we probably need more scale. And all I'm saying is watch this space over the coming months. That is absolute work in progress, and we'll be mad not to be trying to be on NASDAQ in the second half of next year. 3, once spin-outs are complete, would you consider selling the core company? I think my answer to that earlier. Everything's for sale. I think we would get a vastly bigger uplift if we ended up joining up with somebody else, not somebody challenge studies, but somebody who needs challenge studies. And I think that's where we're going. And it's very important. I'm going to switch. That's all my pre-submits. I'll take it from the top now. The questions that have just come in. Bill M, at the last meeting, one of the reasons for a lagging share price was due to a large investor selling. Why is the reason? Look, folks, I think what happened is the end of June, yes, we had a large legacy shareholder. For some reason, he started to dump his shares, didn't contact us. We blamed Tony Richardson wrongly. He sold a small amount. His lockup is gone. He's agreed and he's not to sell anymore. And he seems to see so far so good. So I think any other big sellers will try and manage them. The overall market, we all know, I put a good bit of money in small cap companies myself. That's why I give the management a hard time. Anytime over the years, I'd spare cash. I don't take it out of my little family office companies called Raglan Road Capital and invest. But I think we all know the whole market had a pretty crap summer. I'm very optimistic as we go into between now and Christmas where the market's going to go. Mike P, revenue looks good, but profits and cash a little disappointing. Are you saying the cash position being equal to H1 at the end of H2 will not be affected by spin-outs of DM Immutex? And will these happen this year? If so, will you use a similar model? Mike P, absolutely. Leo has made it clear the cash will increase. We've said it's not going to drop. We're not going to dig into that cash. The money was invested. We got the pullback model right. The advisors were paid. We use the same template going forward again. Dave G, are you open to selling Immutex rather than listed in NASDAQ? Absolutely. The 3 spin-offs, Disease in Motion, we own 100%. We will IPO that, absolutely guaranteed. The other 2 assets, we will extract the biggest price possible we can get for them. And that might involve, hey presto, there's an awful lot of companies who who I think now who have gone up to tens of billions and little rounding figure to take Imutex off our hands. I spent 15 years in my previous life selling companies, a corporate finance guy. So I think if we knows how to sell Imutex, it's ourselves. Graham W., how do you reconcile your H2 guidance of 18 million revenue with comments you made in the past on Queen Mary's facility, maxed at 40 million a year, just by itself and basically full? Bookings will not translate. Yeah, look what we're saying there. If you look at our numbers, we're going to do close to 40 million a year. We have the hotel across the road. The hotel is not, we would say, jammed to the gills. Q&B is jammed to the gills. There's windows, bear in mind, each study lasts 6 or 8 weeks. Well, we had said before, and again, as I'd say cluster, I won't say what, August presentation, I'd say the typical challenge unit, 80% capacity is close to 100. You can never get, because there's, after every challenge study, there's a 2-week sterilization and cleaning out. But as we approach 80%, that's close to 100% numerically. That's when we need spare facilities. I think we were very clear. If even half this market materialize at 250 billion, we have the dry run we need to be able to free up more capacity. And guess what? The capacity is down the street, 165 meters from us. Another site extension. If you try and set up a new challenge study unit zone anywhere across London, anywhere in the continent, it's 25 million, because you have to have all the facilities, the lab, everything else that's in Q&B. Uncle Neil, if he's listening to me, Woodford, spent 25 million establishing HVivo as a quarantine unit. We now use that as a kind of the spider at the center of the web. The hotel across the road is a site extension, another hotel, and that saves tens of millions. And again, the staff can move over between them. David H., revenue-wise, where can you scale? Revenue-wise from David H., where can you scale to over the next couple of years? Is there a revenue ceiling, or can you easily scale to 100 million, 150 million? Look, David, I think where we really scale, there's huge synergies. When we do a challenge study, we get asked, can we do a phase 2 in the field and phase 3? No, we can't do them. We need to be in bed with a CRO who does phase 2 and phase 3. So I think you know my logic where we're going there. And then we go to NASDAQ. So yeah, you could sell out today and get an interesting price, maybe 2 times. Why do that if instead we hold on a little longer and get 3x? Now we've fixed the company, we're driving it. There's nobody getting, my salary is 146,000. There's nobody in the company getting past that. Otherwise they have a target in their back. So we'll keep the costs under control, keep growing it. Pat K, are you still confident CHIM studies will take place in 22? If it doesn't, do we keep the deposit? Absolutely. We said there's 3 of them, 7.5 million. We have possession, use them or lose them. That's what we treat the UK government. They're very nice. We're all taxpayers, but if they give us, if they take 3 slots, use them or lose them, folks. And we, by using them as Leo grabs them each year, cha-ching. But my view is there will be COVID studies next year. But again, the government has to bring them to us. If we find them ourselves, that's a whole different ball of wax. So if we get COVID studies next year, the government needs to come to us for their studies and not us going working it. So those 3 slots are government slots. And that's all I can say there. Tinkara, can you please give a firmer guidance on revenue, margins and costs so that we have a clear understanding of this? I think, look, we've covered that one pretty well. Leo has gone through the revenues and costs pretty well. Where else? Some of these are duplication. Let me see. Yeah, last webcast here, you answered to question consensus. Maybe disappointed we don't substantially exceed 21 sales of 50 million. What went wrong? Well, that was consensus now is $40. Look, consensus now is 42 million pounds. We do want, bear in mind, we're now planning NASDAQ. It is quarterly. If we're going to do something exciting in the next 3 or 6 months, we don't want to be coming out at the end of January, resetting things. So we're setting expectations at the moment that we will exceed by year end, not expectations we're just going to scrunch through. So I think at one stage today, we were one of the few shares that was blue. Okay, it's come off a little bit, but I think what we're trying to do there is set expectations we can beat, not struggle to get. What else? Oh, somebody being nice to me here. I know I talk too much. John G, thank you very much. What a performance, Cathal. You must be very proud of what you achieved in such a short period. Can you remain independent? Absolutely. Look, I'm the biggest shareholder. I'm not rushing. As we say, can you stay independent? I think being listed on NASDAQ and AIM keeps us independent. Maybe it's part of a bigger entity, who knows? But yeah, look, we've been busy. I think a lot done, a lot more to do. And I'm learning. Sometimes I do get too excited and maybe set expectations too close. But hopefully in the round, we try and deliver most, if not all of them. James C. Hi, Carl. Do you foresee a time when you, rather than do a challenge study, ORF will sell models made by ORF to third parties who then run them as challenge studies? No, I'd see, look, long term. We'll be doing phase 1, challenge study phase 2, conventional phase 2, phase 3, doing the whole package. And that's, you can see, will be part of an organization. Our colleague Brenton Buckley, who co-founded the company with me, he sold his company to a little Irish tech company called Icon 8 years ago. Icon 8 years ago had a market cap of 600 million. Today, it's the world's second largest CRO with a market cap, I think, bouncing off 22 billion. The CRO, you get an exceptional growth. Poolbeg, the reason I'm so excited about it, there's only one company in the world similar to Poolbeg. It's called Evotech in Germany. I'm not great at coming up with original ideas, but I love copying. The reason we put Poolbeg together, that unique model, get a load of products, put them through phase 1, and out-license or sell them. That's Evotech. And the only reason I found about Elena Sullivan's on the board as a non-exec director of Poolbeg. She's also on the board of the IP group here in London, which is the board of Evotech. Evotech had a market cap of 500 million about 4 years ago. They switched from doing clinical trials to this Poolbeg model, have lots of things in phase 1, and guess what? It's got a 10x uplift. Icon has had a 10x uplift in the last 7 years. Why should we not look at getting a 10x uplift? We won't get that by selling out too soon, but we could get 10x by going to NASDAQ as part of something bigger. Giles W., it would be good to get more clarity on why the R&D tax credit is negative in the cash flow statements, please. Look, I think that's, Leo, over to you.
That's a timing difference. We get the cash next year for the R&D tax credits that we recognize this year. So we expect very shortly to get the cash for the credits we got. The cash this year for the credits we earned last year. Just, it's an accounting and tax payment difference.
Okay, thanks, Leo. I'm going to be naughty. I've scrolled just to keep our platform people. I'm now going down to start the questions from the latest ones at the bottom of the chat one. So I've got our friendly platform people are deleting the questions as I answer them. So James F., they came in at 6:54. The very last one came in. I'm going to work my way back up. So I've taken the early questions. Now I want to take the bottom ones and work my way back. There's about, don't worry, folks, I will finish up pretty close to 7. I might overrun by 5 or 10 minutes. We'll guillotine at 7:10. I know you all have lots of things to do in the evening. Right, James F. came in at 6:54. How much are you expecting to be charged for any additional hotel facility, not the cost to convert? Cost to convert is just over $1 million. The beauty about it in Whitechapel in East London, we all know post-COVID, there's too many bloody hotels room in the world. People are not traveling as much. There's 4 hotels that suit. We're playing one off against the other. It's a rolling 6 or 12 months contract. So don't worry, James F. We won't be paying too much. It's very modest. That's all I can say. Rosita S. came in at 6:50. For your malarial trials, which institutions are you working with? London School, Anti-Malarial, CDC, and which countries are you doing your trials in? Rosita, we're very much, and Leo goes bananas, this is worse. I have a British and Irish passport, so I'm more British than the British themselves. That's the problem with giving me a passport. We're trying to do as much as we can in the United Kingdom, here in London. Keep it all close. You have the most famous schools, universities in the world, London School of Tropical Medicine, Cambridge, Oxford, Imperial. Why would we go abroad? Let's keep it all here at home, and we can do it. Where are we going to run the trials? Guess what? The malarial trials will be held in our hotel around the corner in QMB, or in QMB or one of our facilities. So we will do the malarial studies, everything here in East London. Glenn D came in at 6:50. You keep mentioning increased capacity converting nearby hotels. What is the arrangement for that? Will you have to buy them, or do you lease the rooms? Do you pay the hotel? Very simple. We've done in the other one. We go to the hotel and say, we will give you X, not a particularly big sum of money, and we'll take out our floor of your hotel or your full hotel for a year. We want an option to have it for a second year, guaranteed in case we need it. And we want a break clause that we can walk away and give you 6 months notice and give your hotel back. It's very simple. So we don't build capacity, we can't fill it. Now, let's fill everything we have at the moment. Like anybody who's smart, like we're not looking for capacity anytime soon. But if this market comes anywhere close to see it going through the roof, we will need capacity at some stage next year. But the trick will be fill everything to the gills. We have 3 facilities. Let's fill them to the gills first. David W. committed 649. Do Open Orphan own the data generated for the characterization, and is this being captured on DIM? Well, believe it or not, we put wearables and all that good stuff in. The data is jointly owned by the partnership, but I'd say Liv, we're pretty good at commercializing data. Our more important data would be influenza data, RSV data, asthma data, and that's been built over 25 years, the company. That's the real data. So the COVID data is interesting. It's part of a partnership there. Connor H came in 701. Firstly, congratulations on the great progress you've made. With the US expanding, is it easy to acquire staff and to run you? Absolutely, lots of people. We should probably publicize it more. We don't do it. HVAV Open Orphan was in the Wall Street Journal 3 times in this past 3 weeks. We will be in the New York Times later this week. We were in every scientific publication. Staff love coming here because they say, wow, HVAV Open Orphan, all that. And we push. I'm a mouthy, talkative CEO, chairman, but you never catch me talking to the scientific committee. Andrew Catchpole and our scientific, we push them out. So they say, wow, Carl, you're sharing the love and you're making a lot of scientists famous internationally. Google Andrew Catchpole's name. He's all over the web. He's spoken Chinese TV, Russian TV. So we've no problem getting staff. Aban M, when can we expect this merger, 21 or 22? That would be, I even say we're merging. I'm saying we've got plans. We have to have plans, big plans. And the plans is get big and get the NASDAQ. So let's see. Richard C, wouldn't it be beneficial to get some revenue streams coming in for DM prior to spin-off to get investors in the market confidence to the launch? I just think we've proven we can do it very well with Open Orphan or with Poolbeg. Leave that one as it's work in progress. We will have no problem IPO and DIM. That's all I can say. Trust me on that. We have to be very careful. If we signed up, bear in mind the model, we've got to spin off a new co. It has to be 90% owned by you and everybody on here tonight by Open Orphan shareholders, and that's part of the tax planning. The management team do get a small, so the new CEO will get a little bit, and some of the team here work harder, myself included, we get a small bit of it. That 90% is then owned by the Open Orphan shareholders. If we do a deal with Fitbit, Google, and Yahoo, and all those people on Amazon, as in Open Orphan, the monsters probably taken out. So we're keeping them warm. As I say, none of them are going away. And it's one of these things, it'll take a little longer, but we'll get there on it. And rather than rush, get small amount of money now, why not go for the big money over the coming months and years ahead? Graham W, is there a Delta variant characterization study underway or complete? Do you need a Delta variant challenge study before starting your COVID studies, or would you go ahead? Look, it's very clear. We're already growing up. I think we're nearly finished. We're growing up the Delta variant because we're the only people in the world that seem to know how to grow viruses. Imperial engaged to do it. The Wellcome Trust is paying for this particular one. UK government's not. So yeah, there will be a characterized Delta variant in the not too distant future, and that will be would be available for challenge studies as well. Paulo, where will you recruit volunteers for COVID studies, given that most people are being vaccinated? I've personally got a fundamental problem going beyond recruiting too many COVID naive volunteers. I think any of them could be my kids. I'm turning 57 next month. Most of the volunteers are 25 to 30 years old. I've met most of them. And I just think that, look, we now have the characterized model. Why test it anymore? It's going to be very hard to get COVID naive volunteers who haven't had COVID. Most of them either have the vaccine or have the COVID. So it's not going to be a problem. Any of the COVID studies going forward will be previously vaccinated or previously infected, which means massively low risk compared to going in. Imagine the thoughts we had. We were actually given young guys and girls who never had COVID before, deliberately given. So that now we had a UK government guarantee. We did it with Imperial College. It's all done. Not a single one got ill, serious, or sick, but we've moved on beyond that. So future COVID studies will be much more like influenza. We'll be giving people something they already have, or they're vaccinated against it. Where will you recruit volunteers? I think we've done that. Look, or I see receivables are pretty high relative to turnover, even more so profitable. Are you happy you're genuinely converting stated profits? Leo, that's yours. Look.
Yeah, so at the half year, we did have a relatively high level of receivables because of the timing of when we could issue invoices to our customers. In particular, there were some big balloon invoices on the characterization study, which we actually issued a little later than we had expected. But what I can tell you is that a lot of that cash is now cycled into the business in Q3. So I think our receivables are a little bit more balanced relative to revenue right now.
Thanks, Leo. Alan D, a possible JV to go to NASDAQ, question mark. Is it right to presume you would go with a JV with another pharma CRO company given you want to remain? Look, it makes sense. We're offering a piece of the pie. We could be much bigger, much faster by offering the whole pie, basically, and being the world leader. So all they say, let's not get carried away in that. That's, we want to set the hair running, but I've said we'd like to be in NASDAQ. There's several ways of getting there. That's one of them. John C. Hi, Carl. You mentioned before we may have 2 malaria contracts by Christmas. That's it. Absolutely. Watch that space. We're actively working on malaria as we speak. There should be announcements. Paul R. for Leo, trade creditors. We've done that. Next one. Next one? Sorry, we've done that one. Peer group. Who's in your peer group? Believe it or not, there's very, very few. We've created the peer group ourselves by the world leaders. So yeah, who's the peer group? Alan D. Kyle, great turnaround. Thank you. In the interest of our share price, is there any way you can make qualifying date for any spin out, the date of the RNS? So it's made to either entitlement. Yeah, look, we keep learning. There was mistakes made, or like with so many advisors. Bear in mind, the only other companies doing this successfully is EKF, and they didn't get the first couple ones right. They have a model. One of our large institutions called said open orphans like a Russian doll. You keep open, bringing them out. That's the plan. Let's keep bringing them out. But yeah, there was things we learned there. Let's say the recorded date, we'll have to work on that before disease emotion. David T, Leo, can you explain why H1 is lower than 2x Q4 2020?
Yeah, so I think in H1, you saw a significant scaling up of our operations. We took on board the Whitechapel Clinic. We took on quite a number of extra staff to manage the characterization study in the Royal Free. So overall, while we trended higher, we were carrying a more complex business base, and that translated into more cost. So the margins weren't quite as good as we had hoped for, but the overall profitability level did rise versus the prior period.
Thanks, Leo. And again, look, we're being very clear, David, is that we could have done better. We should have done better. We probably should have focused more on the monster market in front of us earlier this spring and summer, i.e. the whole 250 billion growth in infectious disease and respiratory, where we had a lot of focus on COVID. The money is invested in that, and we can crank it up now as soon as this study is completed. Sarah K, if a product, and don't worry folks, we're down to our last 4 or 5 questions, so we will finish at 7:10 as planned. Sarah K, if a product comes along that provides protection from COVID for several years at a time, will there still be need for COVID challenge studies? That's a good question. Yeah, if a product works, it looks like no one product's going to work well. I had a really good work colleague. He got double vaccinated. I've been very blasé. I've traveled to London flight every time for 18 months, bar 2 weeks in June, bar 2 weeks at Christmas, and kind of being careful. And I was shocked a work colleague who's double vaccinated is quite ill at the moment. So I think COVID keeps mutating and changes. It's going to be around for quite a while. I think if a product was going to work, we'd have seen it at this stage. I think it's going to become more like influenza. It's going to be around. So I don't think we're worrying. But look, hopefully, it'd be great if there is. But the big thing, even if it comes along, Sarah was saying, we've got an enormous market in front of us from non-COVID, and that's the infectious disease. David P, last 4. David P, what IP do we have to protect challenge studies? It's a really difficult market. You have to have 25 million initially to build a challenge unit. Then you have to have the challenge viruses. Then you have to have the challenge model. Then you have the viral laboratory and the staff. And up to recent years, there wasn't many of those staff except for ourselves. So yeah, the IP is difficult. There's a barrier to entry in all of them. And the big IP is each challenge model, it's a characterization. We don't share it. They're private. They're patented. Last 2 questions. Elric L, What is each bed worth to the company, and what is the total capacity? And are there any plans to increase? Look, we don't go into that in too detail because that would guide people what we're doing, but each bed is quite valuable. With 42 we own and control. We can scale that by 10, and with 19 up in the Royal Free, and we scale it. So I think the ticket is that we will only increase capacity. We can do it really fast. We now have a model. It took us 3 months to get the Whitechapel Hotel converted to clinic. We can do it again in 3 months. And it cost us $1.5 million. We can do it the next time around in less than $1 million. Last question, and hopefully on the button of 7:10. Christian A. What to stop traders jumping for the free shares and the spin-off and then selling? Yeah, that's an issue. Looking at some of the things we're not sure. They say, what's to stop traders jumping in for the free shares in the next spin-off and then selling the next day so they get the free shares? Look, we'll have to think on that. We will give thought. That's where we're being careful. We could be charging down the road at the moment, getting these emotions done this side of Christmas, and instead then have a lot of chaos. We're trying to see, right, we won't get everything right. We try and get most things reasonably right. So that's work in progress. Folks, without further ado, I've talked, I think, enough. We're talking up for 7:10. We might get into it. Mark, what do you think?
Cahill, you're bang on. You're 1 minute late, actually, but we'll forgive you. But thank you, Cahill, firstly, for being so generous with your time, and also to the engagement shown by investors who have continued to submit questions throughout. Cahill, Leo, I know investor feedback is particularly important to the company, and I'll shortly redirect investors to give you their thoughts and expectations. But Cahill, if I may finally just ask you for a few closing comments, and then I'll redirect investors.
Yeah, look, Mark, I just think we're delighted people will bear with us. I know it's been a bumpy 3 or 4 months. It's been a bumpy 3 or 4 months for every and all forms of the market. It's going to be a bumpy time, but I think I've never been happier, never been more excited. I'd say, as the movie says, a lot done, a lot more to do. And I really think we can really grow like Icon. Why not? Pool bag, I have designs. I'm the biggest shareholder. Get that 10x. Just look at Evotech. It went up 10x, not 3, 4, 5. The only way we'll grow Open Orphan 10x is getting to NASDAQ and becoming very big fast. We will hit limitations by purely on name, but let's see.
Perfect. Cahill, Leo, thank you once again for updating investors this afternoon, or early evening, should I say. Can I please ask investors not to close this session, as we will now automatically redirect you for the opportunity to provide your feedback in order that the management team can really better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of Open Orphan PLC, we'd certainly like to thank you for attending today's presentation. That now concludes today's session, and good evening to you all.